Well, at this point, I want to bring in Oliver Sloup, Blue Line Futures. He's located in Chicago. And Oliver, you and I were talking during the break right before we came on here live. You know, that soybean trade kind of had the appearance that it was pretty overbought in advance of the USDA reports coming up later this week. Do you think this is just a lot of people taking profits off the table, heading for the sidelines ahead of time, or what?
Yeah, well, exactly. If you haven't been paying attention to the soybean market and just looked at today's prices, you'd think, holy cow, what a disaster this is. But if you zoom things out, we're right back to prices that we were trading at on Thursday. So this basically just erases Friday's gain. So it is a big down session. But I think you had mentioned it and hit the nail on the head that I think this is profit taking ahead of the USDA report out on Wednesday. On top of that, we just have a risk off trade across a lot of these commodity markets. We've got the outside markets as well under immense amount of pressure. The indices, the stock indices, that's the Dow Jones and the S&P, are down sharply. Crude oil is struggling a little bit as well. And you got this kind of sell first, ask questions environment here to start this week's trade. I wouldn't be surprised to see the grain settle out a little bit more as we inch towards that all-important USDA report on Wednesday, where that's going to be the big focus. As of late, a lot of the focus has been on weather, but we've got a USDA report which could give us a little bit better of an indication on which way these markets want to go through the first quarter.
One bearish factor is this U.S. dollar index. Right now, we're down 328 points at 96.050. This is on the March futures contract. And you mentioned these equity markets coming under pressure today as well. A lot of selling in the entire marketplace in general. March on the Dow Jones futures now down 581 points at 35,527 right now. So that's actually quite a bearish tone. Oliver, what do you tell farmers when they ask you about what's going on in the wheat complex right now? And there is so much bearishness, but now do you think that maybe if there has been some spread trading between corn and soybeans against the wheat or what have you, are we finally reaching a point to where maybe that can go the other direction again?
It's certainly been an interesting complex. Grains as a whole over the last several weeks, corn, soybeans, and wheat have kind of been trading on their own. Beans obviously to the upside, wheat to the downside, and corn has been the Goldilocks, which hasn't been too hot when other markets rally and not too cold when other markets fall apart, just right. So corn has found a home near $6, but wheat continues to be the laggard, and we wouldn't be surprised to see that continue. 750 is a battleground area psychologically and technically. If the bulls can't defend this area, I wouldn't be surprised to see additional pressure take us back towards that 200-day moving average for the March contract. That comes in a little bit closer towards 730.
And from what I understand, there were some reports that Ukraine's exports have risen over what they were a year ago at this time. They also, I believe, raised their total crop production estimates. So that's probably hurting the market a little bit today as well.